Today's conversation is sponsored by First Generation Capital Partners. If you're an accredited investor and you want to know about how we're helping other accredited investors keep more of their income, go to firstgencp.com/going long.
We go through another COVID again, and you have some rent that's being paid, but your restaurant's closed down, you know what I mean? Or it's diminished, your income from that. You have different ways of how you're going to float yourself and float your family if you're independent like that, you're entrepreneurs.
You're listening to the Going Long podcast with Billy Keels, the #1 podcast for long-distance real asset investing.
Welcome to the Going Long podcast. We're back once again to continue to help to educate you so you feel much more comfortable as well as confident investing beyond your backyard. And yes, I'm your host, Billy Keels, and we are back for another fantastic conversation with one of our amazing guests. And before we get into that, just want to say thanks so much for continuing to leave your honest written reviews as well as ratings and sharing across social media, specifically LinkedIn and Instagram. So really, really appreciate that. Continue to tag us. And if you're still thinking about leaving that honest written review, go ahead and do it. And for those of you who want to check out any of the more than 300 episodes of this top 1.5% rated podcast globally, you can go do that. Check it out at firstgencp.com/podcast. Transcripts, show notes, audio, video, you can find it all over there. So so check it out, firstgencp.com/podcasts. And as for today's conversation, if you really want to understand how the global perspective can help to supercharge your long distance investing success, this is going to be a conversation you're going to get a lot out of, because today's guest not only saw real estate by watching his father do it, he also was building businesses and then taking those early lessons to be able to help others today. So I'm really excited for you to listen to today's conversation with Charles Carillo, and we're going to get to that just after this. So if you want to understand how having a global perspective can positively impact your long distance investing strategy, then guess what? Today's the conversation you're going to want to listen to. And when I say this, until the very last word, I really mean it. Until the very last word. You know why? Because today's guest not only co-founded his own payments company, and when he did that, he was focused on financial consulting for both domestic and international companies, which is always music to our ears. He's also an active investor in a number of different assets. I'm not going to steal his thunder. I'm going to let him tell you that. He is super, super strong in understanding the passive investor and understanding how to be able to bring the most value. He also is the host of the Global Investors Podcast, and he is the founder and managing partner of Harborside Partners. It gives me great pleasure to welcome to today's conversation, Mr. Charles Carillo. Charles, welcome to the show, man.
Thanks so much for having me on, Billy. It's great to be here.
You know what? This is kind of like a long time in the coming, right? To finally, I get a chance to hang out, chat with you. You have been in my, Instagram feed, LinkedIn feed, all this kind of stuff for quite a while. And the fact that we're going to get a chance to have the Going Long family learn more about you and how you're adding value is just, it's a real treat. So I'm glad that you decided to invest some time with us today. You know what, Charles, here's the thing. Normally, you're going to get 5 questions. You're going to get 2 in the beginning. You're going to get 3 in the end, and the entire Global Going Long family knows about that. So I will kind of want to get started and just help us understand, where is it that you call home in the U.S.?
So I'm based in North Palm Beach, Florida, which is about, it's 60 miles, 100 kilometers north of Miami. So people know kind of where it is there.
I love that. He already went straight to the translation of kilometers, miles. Man, you're right on it. Boom. Love it. And keep it on that track, man. Positivity. I love positivity. And it's one of the things I really appreciate every time a guest will share. Help us understand, Charles, what's the most positive thing that's happened to or for you in the last 24 hours?
I made dinner for my wife last night. Oh,
fantastic. Now, are we allowed to ask what? Well, I guess I am, because I'm the host of the show. You know what it's like. So what did you make last night, man? I'm curious minds want to know.
I made homemade pesto from basil that I grow in my backyard, and I do it by hand in the mortar. It's a whole process. If anybody wants the recipe, just reach out to me on social. I'll give it to you.
There you go. See, fantastic. And you can find him over at IG for sure. And he'll tell you more about how you can find out about the things that he's doing. So, Charles, listen, man, I want the entire Going Long family to get a chance to know you, but I also have to make a confession. I'm a recovering perfectionist, and I try to do things that sometimes are impossible to do, like tell your entire backstory in a 2.5 second introduction. Never was going to happen. So what I would love for you to do is share your backstory in your own words, Charles, And one of the things I would ask you is that if you can also share with us, what are some of the major decisions that you've made to get to this point in your journey? And then we'll see where you and I take the conversation from there.
Yeah, so that's great. So I grew up in I'm originally from outside of New York City, a couple hour drive outside New York City in Connecticut. And I grew up in a family. My dad was a real estate investor, started in 1984 with apartment buildings. And so I grew up in the business, and my dad self-managed the properties himself. He had a whole bunch of them. He was full-time in it with one partner for many years, and they weren't the best of property. So it wasn't something when I was going through elementary, middle school, high school, I'd really want to do. But I think there was a turning point somewhere during the end of high school into college that I really learned. When you look back on it and you kind of see all the pros of investing in real estate and what it can do and how powerful of a wealth builder it is. When I got out of college, I bought a 3-family, and now they call it house hacking. This is 2006. We just kind of like didn't really call that. We just said we're going to live in one and rent out the other 2 and see if we can, kind of cut down on the mortgage. But I did that, and I rented out the other 2 floors to college friends because it was about a mile and a half from the college I just graduated from in Connecticut. And then a couple of years later, I did another one about a block away, another 3-family. And this was at the end of 2008, and which is a very turbulent time in real estate all over the world, not just in the United States. And then I kind of went from there. I bought another property in 2009, and it was just and I self-managed all the properties, and I think I had like a dozen units in these properties, and they're all close to each other. So it was easy to and I self-managed them for 6 years. And then moving down to Florida in 2012, and we started focusing on larger properties. And then since really 2017, 2018, we've been involved in syndications primarily. And since then, sold all of my smaller apartment complexes that we just spoken about in like a portfolio deal to an investor out of New York City. And, really been focusing on larger deals, bringing in investors, and being in Florida since 2012, really focusing on the whole Southeast. Everything really what we call here in the Sun Belt, but it's a lot of Florida, it's Georgia, and Texas, the other main markets that people really like because of the growth and because of landlord friendliness, which we didn't really have in the Northeast.
Yep. I used to own properties in the Northeast, and I don't anymore. So, there's a number of things that you just shared, and there's like, I'm always really, really interested because I grew up in a household where nobody was really doing like investing. And so you mentioned that you watched your father as a landlord who was self-managing. And I'm just curious, like, kind of what was, if you can think about, because you said when you were in high school, middle school, whatever, it wasn't really that interesting, but in college, you found yourself doing the same kind of thing. What were dinner conversations like for you when you were younger, especially talking to your dad about what it was that he was doing, self-managing these smaller properties? Maybe give us some insight into the mindset.
Yeah. So so my dad self-managed, but he had a small little team I should have put in there that he did it. Cause at one point him and his partner had about 100 units, and some of them were like 6 units right next to like 6 unit, then a 12 unit. And some are mixed use. When I say mixed use, we call that, you're in a city center anywhere in the world, and you have retail or office on the first floor. And then on the additional floors, you're going to have residential or other office, but mainly residential. And those are the properties that he really focused on. And, he would have people that really helped him collect rent and all this kind of stuff. But there's many times that we went apartment to apartment to collect rent. I would run receipts up and down the stairs, and I got the job of counting all of his rental money at the end of the month, and got $1 for doing that. And it was just like you just learned about dealing with people, dealing with contractors. Now these were like DC minus properties. So these were not there was no pools, there was no dog parks, let's just say. So it's a difficult demographic to make money with. And you have to really know how to, in lack of a better word, control expenses to make money in that demographic. And it's a difficult property to sell as well, because you're selling to it's not as liquid because there's not as many buyers that want to get involved with those properties, unless you find, new buyers, new investors that don't know any better. You sell to them. But, it was back in the 80s. So like, as my dad was saying it to me, it was like, you could just, he'd go out to like Friendly's or one of these kind of like restaurants or something where these old time landlords would hang out, and they just like sign properties over each other. There wasn't like back in the day, there wasn't like due on sale clauses and all this stuff. So he picked up some of them just by getting them signed over to him. And it was just a whole different realm of real estate investing that's completely different today. And but it was you learn a lot about the business. And I would always ask him. I read my first real estate book was like when I was in 7th grade or something, was Trump Art of the Deal. And my dad had it on a shelf in his office. And I would ask him all these questions. I was like, why don't you have management? Why don't you do this? My dad's like, oh, they take too much money. This, he the whole thing of what it was. It made perfect sense, but it's much easier to hire management and better properties you get. Yeah. When you're dealing with lower class properties, older properties with tougher demographic of tenant base, then it's really difficult to hire for it. So that was another reason I think so. But it's you see all the pros of it, like the residual income. You're never missing. My dad never missed any of my sports games, anything like this that I went to. No extracurricular activities, weekends or during the weekday. Like it doesn't matter when it was, and my dad could be there. You know what I mean? So. You didn't see that from your other family. And I grew up in a small town in Connecticut. So it was an upper middle class, let's say, area. And everybody else, it was much different. People that had professional jobs wearing suits and stuff to the office. They weren't always there. You know what I mean? They'd be showing up at the end of the game. And my dad would be there like at the beginning of the game. You know what I mean? Kind of a thing. So you just like see small stuff like that. And you don't put 2 and 2 together when you're in middle school. It's like the last thing a guy in middle school is thinking about. But it's a different thing when you start figuring out what you want to do with your life, and you have that entrepreneur bug, which I had for my whole life. And so I was like, it was something that I knew I wanted to do.
So it's interesting, right? You knew you wanted to do that. You saw the good, the bad, and the ugly. You participated. And as a result of being participated, you were paid financially very little, right? As you mentioned before, but hey, listen, a dollar's a dollar. At the same time, you were receiving massive amounts of experience that I'm sure are impacting ways that you're making decisions today, right? Yeah. But before we even go there and kind of juxtapose that, I do want to make a stop, because you said you've been like someone you want to build businesses, and you've done that your whole time. Like one of the things I talked about is you also co-founded a payments company. Yeah. Like, talk to us about that and what that experience was like for you, and also maybe some of the lessons that you learned through that are also helping you help others today.
Yeah. So like I've never had a regular W-2. My last job was in high school that I got a W-2 from that I didn't sign or was part of. And the thing is that, so I'd always be doing like little like side hustles online. This is like when the internet was really starting. I mean, I remember selling stuff on eBay, and eBay didn't even take credit cards back then. My dad had to write a check to them to pay the fees, like it's back in like late 90s. And the thing that was that when I started, my other side of my family is involved in insurance, and my dad was involved in real estate, and there's a huge correlation here. It's residual. You know what I mean? Mm-hmm. So when I was like in college, I was like, I want to start something that's really residual based, where I'm getting something. And I found payment processing, and I was working with a company, and I set it up when I was in college. And my brother came on a few years later, and he really runs that company, or just kind of manages, I would say. Right now, we have a couple people that work for us full time, but he really manages the majority of that now. But the main thing there was it was residual, and you had not that you can just like, it's like getting money while you're on the beach, that type of residual, but it's Monday comes around and you're not like, I gotta sell X, or I gotta do this. You're always selling, you're always putting new clients in there, and you're always managing the ones that are there. But then when you look back and you're like, you get a residual statement, you get a wire, whatever it is, for commissions that you've done, and you look back on it and you're like, oh, I set this person up in like 5-6 years ago, and I'm still getting paid on it. Like the power of that. And it's the same thing with real estate, but it was one thing that company allowed me to invest a lot into real estate. And I invested a lot of money that I made in that. And it really shows you that, once you're getting the money into real estate, I always found that as a real safe harbor, because, you can get accounts, you can lose accounts, you make a lot of money this month, next month it might not be, there's a lot of what they call like the peaks and valleys type things that you get when you're in these type of businesses. But when you put into real estate, that was a very concrete investment that was not correlated to your business, if we can say it like that. So, and I love telling professionals now that are in something that's self-employed, and I'm like, hey, it's whatever you do, you don't have to invest through us or anything else. But real estate, if it's done correctly, it's going to be something that's going to be able to, in the background, give you additional income and give you a buffer if you have months, right? And you don't, you know what I mean? Months or times where you're not making as much as you were, you know what I mean? And the months that are good, you put more money into it, and then you just kind of keep that going, because everybody knows people have made a lot of money in real estate, even just buying like a second house or their own house. You know what I mean? It's something that over time, it's not really time in the market like everything else. It's like your time in, you know what I mean?
Yeah. Yeah, no, and that makes a lot of sense. And it's really interesting that when you have a desire to build, right, you're building, you start to see that you can create, and every business model is different, but but what's really important, and I want the Going Long family to hear what you said, is you saw that correlation of providing a service to be able to also generate residual or ongoing type of income. And so depending on, what your level of education is, the teams that you're working for, you're able to have that stream of income be able to help you get what it is that you really want. And I always like to say, it's not the money for money's sake. It's the money so that when you're thinking about, Charles, you recognize today that your dad was one of the few dads that was at the baseball game or whatever sport you were playing from the very beginning, right? It's being able to share those experiences or provide those types of experiences. And we're always drawing on the experiences that we had from before. So appreciate you going into that. And also too, I mean, just given the active experience you have, as well as the passive experience, you started talking a little bit earlier about business owners, and they can have another stream of income. Talk to us about what you've seen or experienced in terms of some of the positives and maybe the pros and cons of being an active versus passive investor. Because some people are maybe listening for the very first time. They're like, oh, okay, you mean I could actually do this with somebody else? Talk to me about that.
Yeah. So this is something I think everybody, if you anywhere that you talk to that is educated in investing at all wants to be invested in real estate. Okay. It's just what I think the majority of people want to do every time I talk to people. And the thing that always holds them back is the management, is where you have people that sell it as, the call at, 3 a.m. for the toilet and stuff like that, which I've gotten before. But the thing though, is that it's really, if you have a business or you have a profession that you're working at, and I saw this a lot when I would talk to like old school real estate investors. When I talk about old school, I'm talking like mom and pop real estate investors that maybe bought 40 or 50 units. They're probably all paid off at this time. And I remember talking to someone, they would own like little bars or little restaurants. And like, oh, I hate the bar, I hate the restaurant, that I started this, but I was able to buy like 50 units of real estate with it. And, that's like, they're setting it up as that's their legacy. Well, that is their retirement. You know what I mean? They're very low risk kind of people, so they're paying down their debt. I feel you have a lot of mom and pop investors like that. And it was something that they're doing something, they're investing it somewhere that's not correlated. So if, we go through another COVID again, and you have some rent that's being paid, but your restaurant's closed down, you know what I mean? Or it's diminished, your income from that. You have different ways of how you're going to float yourself and float your family if you're independent like that, you're an entrepreneur. So that's why I think is I always talk to people about that and kind of tell them, it's just have something going on in the background, but you can do it passively through having with syndications, which is something that we focus on. And that is something where investors can come alongside us in our deals that we're doing. And then what we'll do is they receive a distribution, whether it's monthly or quarterly, and then they'll receive the majority of their upside, probably 60% of the profits they make on it when we sell that property. Or if we refinance it down the road, they'll get a chunk of their money back as well. And it's usually like a 5-year period. But the thing though is that they're putting it somewhere where they don't have to worry about any kind of management. They don't have to worry about making sure that their numbers are correct, if they're buying the right property. Because as I found out, and I mean, I imagine, when you speak to real estate investors, it's this normal progression of, it's kind of like what my dad did. It's like not so great properties. And then he started buying better properties as he became more experienced and seasoned over many decades of investing in properties. And properties he owns today are much nicer than they were, 5 decades ago. So the thing though is that with all this being said, it's something that, if you don't know what you're doing, the passive investing, or if you're in a higher paid job, I mean, you don't want to be dealing with getting calls from people and then trying to find people. Today, in today's age, it's very difficult. It's always been very difficult to find good people that actually show up, that are going to be a reasonable price to do work. And I mean, you don't want to be wasting your time doing that. So that's where the whole thing of passive investing and syndications really assists anybody that's successful, anybody that has money that wants to be diversified from your typical, let's say, stock market bonds.
So we're looking at it towards the end. This actually leads up to really great pivot, because of the next question. You're talking about the diversification versus bonds and things like that, but also recognizing that, there are pros and cons to both, to active investing, to passive investing. One of the things that I've also found is that, especially for high wage earners, when your wage is very high, if you are making, I don't know, X dollars an hour, X euros an hour, if you find yourself doing a job that pays 0.5% of what you would normally earn on an hourly wage, then you've just lost 95% of your productivity, because you're chasing the way to fix a toilet, right? And I've been there too, by the way, Charles. So we've all kind of gone through that. But you picked up on one of the things, or for those of us who are further along in our journey, right? Some people are just getting started and learning, and you're helping them to get clarity on that. But talk to us about, you were talking about diversification. And there's always a question that I have, and specifically this is around investing. What are your thoughts on specification or focus on a very specific type of investing versus just diversification across a number of different types of investment vehicles?
That is a great question. How I think of it is, so Billy, I'm a big passive investor myself in all types of asset classes. I invest a lot passively, and I do more deals passively as a passive investor than I do as an active investor. And we probably do 4 deals a year as active investors. And the thing is that it's something that people bring stuff to me and I won't invest into it. So I had a good friend of mine that lives near me that is raising money for a short-term rental fund. And I was like, I can't, I don't know anything about it. I've never done it. I just don't know enough about it. I want to learn more about it, but it's just not something that, I'm comfortable in doing. Whereas if someone brought me a multifamily complex and outside of Dallas, and I know exactly, and I've got, I'm pulling crime reports and all this kind of stuff, and I've got that thing narrowed down in 15 minutes, I'm like, which way I'm leaning on it. That's something that you really know what you're doing. But you can go into different classes. It's just something that you want to make sure the person that's running that, you don't want to be the active person behind that. So it's like I passively invested into triple net lease properties, like properties that have one tenant for like long leases. They'd have like a Walgreens there that got built and it's got a 25-year lease. I don't know much about it, so I'm not going to go and put investor money in it and try to find these deals and try to underwrite it myself. It doesn't make sense. But I would put my money with an active person that's been doing it for 15 plus years, right? That knows what they're doing. And so you can have diversification, but you really have to know where you're spending your time and what you're focusing on. For our firm, what we do is I really like, in what we've done over the years, is really focused in on B-, B-class real estate, built 1980s after, into areas that are growing throughout the Southeast with there's like 7 markets we really like. And we have 4 different operating partners we work with in those markets that specialize in only 1 or 2 of them, sometimes only 1 of them. So we haven't really narrowed down of what we're going after. And that's for us being active. When we get into passive, that's when we can start bringing other asset classes that I don't know anything about. You know what I mean? That's where you're like, I would put money into that short-term rental. If I did understand it or whatever, you do it passively with someone that would understand that and that you trust them to know what they're doing. You know what I mean?
Yeah. And so, go ahead. Sorry. Keep going.
No, go on.
No, I was just going to say, it comes down to being able to, there's kind of 2 different lenses on it, active versus passive, but at the underlying, I think thing to think about for all of our going long family members, is it starts with the education and starts with feeling comfortable. And so whether you are, there is a focus on getting the education that you need. It's also focus on getting the experience. And that means your experience or leveraging someone else's experience so that you get to a point where you are comfortable. And then when you are comfortable, meaning that you're okay with accepting the risks that are associated with that particular investment, then it's more than likely time to move forward. And depending on how much control you have, either you're someone who's actively involved in this or you're looking to passively invest, it opens up a wider a wider array of possibilities for you to be able to invest. So that's how you're balancing both the focus as well as diversification in terms of activity, as well as investing dollars or euros. Does that make sense?
Yeah. Yeah, no, it's perfect. It's exactly.
Okay. So talk to us a little bit about, what you're doing in Harborside Partners. I know you also have this really, big focus on investor relations and how you're helping others. Talk to us a little bit about that.
So as I mentioned before, when I speak to people, and we have a lot of people that reach out that are a lot of professionals in all different types of walks of their life, and different goals. You have some investors that come to you that might be looking for more appreciation, don't need the money. You have some other ones that want cash flow, and that's where they are in their stage of their life. It really depends. So with that being said, when we work with investors, it's really getting to know exactly what their goals are, and what they're really looking for, and what they're really looking to get out of investing passively in real estate. And it's something that we kind of tell them exactly what our deals are, what we look for, what our criteria is. And then when we send out deals, it's really coaching them on, this is kind of what we're looking at. These are the points that I really like about it. And this is what our team and our underwriters kind of have gone through and pinpointed as where we have really focused, and what are the pros of this, and what are potential drawbacks on it. I mean, that's one thing that we really focus on, making everybody comfortable with that and knowing exactly what these deals would look like. So we give them a lot of samples of what we've done previous deals, and they know exactly how that works. And really, like you said, it's educating people, becoming more comfortable with investing in real estate, investing through someone else, which is a much different model than most people have. It's not like you're just going onto your broker's website, you know what I mean, and buying some stock or buying some mutual funds. You're going in, you're actually partnering in a limited partnership with a group of people that are experienced and that are going to be handling a lot of the day-to-day, or putting a team in place to handle a lot of day-to-day, while you're really just providing capital after you do your due diligence, and and getting monthly reports.
Yeah. Okay. And, that is one of the things, as you focus on serving others and you focus on being able to educate. And I really appreciate the fact that you talked about also talking about the things that are potential risks, right? There's one of these things that, as part of the education process, it's making sure that you highlight, hey, every single investment has risks. Life has risks every single day. And it's a matter of how familiar are you with those risks, or how familiar is the team that is going to be managing this asset to provide a service and a return on time and capital for investors, which makes a lot of sense. Listen, man, before we get to the Going Long Final Three, because we kind of have to get to the Going Long Final Three, Charles, you also have a podcast, Global Investors Podcast, and that brings, that just brings like really, really well in my ears. Talk to us a little bit about what the inspiration was for you to start the podcast, and kind of, I think the name says it all, but talk to us a little bit more about your podcast.
So when, in 2019, I started the podcast, and we had just done our first syndication, and my first investors that I worked with were international investors from Europe that some were US residents, some weren't. And they, I would go when I was, I'd be over in Europe doing stuff, because we had like a lot of international clients for our payment processing. And you would go out to dinners and you talk to people, and they want business owners, and they're talking about investing, and you tell them about what you're doing in the US. Just so this was like a side hustle for many years, right? Yeah. And it was something, and they're like, oh, how do I do that? And you're like, I don't know. I mean, I think you can do it. I mean, I hear other people do it. I don't know how, but so it was something that when I put together the show, it was really, really focused on passive investing in U.S. real estate. And we have a lot of active things. Now, obviously, you learn about passive investing, you learn about active investing. It's all part of it, learning the whole industry. Yep. But it's about with a focus on foreign investors investing to the United States, which there's extra hurdles, as we were talking about before the show, Billy. There's just extra hurdles that they have to go through. And when you're working with operators, it's something that some operators aren't as fine-tuned with knowing what to do. And so it's something that we really focus on working with them. You come to us, we'll give you a list of different professionals that you should work with to set up your plan here correctly in the United States. And we tell you how we take money, how that goes, how everything, bank accounts, the whole 9 yards, we can assist investors with. And that's really what the whole show was focused about, was just letting people, and because years ago it was like big institutional family offices, you know what I mean? And from different places in the world that want to come and invest in the United States. And this allows that the show is for more of your individual investors that want to, professional business owners that want to really start getting, because a lot of places outside the United States, they don't have as much cash flow. And there's many markets like that. And the United States we have great financing, and we have properties that really cash flow when compared to other areas of the country, the world. So we really, letting investors know about this and explaining how it goes and how it's easier than they might think, and how they can access it. That's kind of what the whole show is about.
All right. Awesome. So I appreciate you giving us the heads up. Also the genesis of the show. And once again, it's about how can you help others solve an issue, solve a problem. So listen, Charles, man, with that, we've got to get to the going long final three, man. But as a guest, I never ask anybody to go along final three unless you tell me that you're ready for me to ask you. So are you ready?
I'm ready.
All right. I figured you would be, man. And since you've already traveled all over Europe, this first question of the going long final three is going to be super simple for you. Help us understand, what is your favorite European city that you've either visited or is still on your bucket list to visit?
I would say Venice. I've been there several times, and the history, and it's like no other city in the world. And just put that together with the history of it, it's a very unique place.
Venezia. Okay. Very cool. Yep. It is. Yeah, it's a very cool place. And so we're going to leave it. We're going to leave it at that. And so, you know what, man, you've been doing this for long enough. I'm just going to ask you the question. Whenever you're going through your building experience, the reality is that you're going to make a lot of mistakes. Some people will call them learning opportunities. Some people will call them seminars. But the fact of the matter is you're paying full price for them because you're going through it. You're making the mistake. I don't want you to think about the mistake that was made, Charles, across your, vast experience. I'm not asking you if it was active or passive, but I really want you to think about what is one lesson that you learned through taking action and making the mistake or having the learning opportunity that that the Going Long family needs to learn today. What's that one bit of advice that you want to share with us? That one lesson?
Buy better properties in better areas.
Like that.
I'm not saying like you're going to, Park Avenue and buying stuff, but, you're just going to be buying properties in areas that are a little better, that are going to be up and coming. And it's going to really help you being an investor.
All right. Fantastic. Appreciate that. And lastly, what is one book that you would recommend to the Going Long family today?
I would say the 80-20 Principle by Richard Koch. And I think that's a fantastic book. It's not just for real estate. It's for personal life and everything. I mean, you can bring it to any kind of part of your life.
Fantastic, man. I think this is fantastic. The 80-20 Principle. We'll include that in the show notes as well. So if you're running on the treadmill, don't worry. If you're cooking dinner, all you're going to need to do is click a link. We'll make it really, really simple for you. So I'm thinking to the beginning of this conversation, you're talking about 1984, not the book, but the year. And you're watching your dad and you're thinking, wow, your dad is doing this real estate thing. He's building a business. And more importantly, he's, present. You recognize that the other dads weren't there. And you also recognize like, hey, listen, high school, college, want to do a little bit of pivot after that. You've got this entrepreneurial flair. You like to build stuff. You want things to get moving. And well, back in 2006, you were already house hacking, as they like to say, but you called it something different, but you were adding value, something that you saw at home, not just the great stuff, but you saw the good, the bad, and the ugly, and it all came together. But then, as you continue to build your portfolio, you got to a certain point, you said, hey, you know what, this sounds good, but I'm continuing to build my education base. And I've done this, I've self-managed these, but there's this thing called syndication. And well, you know what, you decided to get started in that. And not only did you get started in that, Charles, you also leveraged the previous experience that you had from starting your own companies, recognizing that there are certain bits of value that you could extract so that you can be living your best life. And aside from leaving the Northeast to move down to the Southeast, you're now helping other people by educating them with your podcast. You're also with your company at Harborside Partners. But, everybody's just saying, yeah, Billy, just ask him the question for goodness sake. So I'm going to ask you the question, man. What is the best way for the Going Long family to find out more about you and all the awesome stuff you've been doing?
So you can go to harborsidepartners.com and there's the podcast links there. We have a free guide on passive investing in real estate. There's tons of information on everything you might want to know about real estate, investing in real estate, active or passively.
All right. Fantastic. So everybody, check them out, harborsidepartners.com. And so, yeah, man, listen, Charles, like I said from the very beginning, it's a pleasure to finally get a chance to do this face to face, have you share your knowledge, your wisdom with the Going Long family. And I just want to say thank you very much for deciding to invest your time with me and the Going Long family today.
Thanks for having me on, Billy.
All right, cool. So if you give me like 15 seconds and then I'll get you out of here. So Going Long family, I mean, what more can I say? Charles said it all. He shared his experience. He shared the good, the bad, and the ugly of the things that he's learned about real estate, also how he's helping others today. So listen, share today's conversation with someone else, have a conversation, go from theory to practice. And while you're doing that, I'll be here preparing for the very next conversation. So until then, go out and make it a great day. And thank you very much.